indicate if they want to participate on something. Put your hands up. I've been first. Okay, 1, 2, 3, come on. 1, 2, 3. The 3 people are spotted. Do you have a signature? You have a signature. You have a signature. Take it. Sign your signature there. Nobody should change their signature, right? Sign your own first somewhere. On that. Yes, that's your signature. We have all seen their signatures, right? They cannot change it. Now stand here. Who did the first? Cecilia, you have to sign that now with your waist. That same signature. Show us how you did it. Okay, go ahead. The next is who? I've been sign your signature. Are we sure that's it? That's all? Okay, go with your own. You're there.
Make it straight like 2 dots.
Okay, let's clap for them. All right, take your seats, take your seats. Abaka. Okay, this is what we're going to do. Today we are going to talk about accounting fundamentals. The basics. We want to teach accounting because accounting is the one of the key aspects. I told you for the last time that we have done marketing, we have done global strategies, we've planned create values, we have designed a business model. Right? Now we want to do accounting itself. Accounting here, I'm not taking you people to become accountants. I want to give you basics. This word, fundamentals, is the basics of accounting. Okay? Now we want to see the use. Why is accounting necessary in business management? How do we go about it? I told you last time that before you start anything, you first of all look for what? The what? Why. You look for why before you start going into how. Okay? Why do we need accounting? We want to empower small businesses. Right? First of all, we are not doing the major accounting like you become a certified chartered accountant. We just want to get basics in accounting so that you can know how to empower small businesses. They can make financial decisions and all of that. Okay? Here, who am I to teach you that? Well, I have some little experience. Okay, I have been working with a lot of SMEs. I have done about for the past 15 years, I've been working with SMEs, and I have discovered that their major problem, most of their major problems, is managing their finance. The accounting is what really destroys them because they have the ideas, right? They know that they want to start a business. They can start the business. They know how to convince people, basically, to do their marketing. But most of the time is when they go and cash starts coming in, they don't know how to manage it. So that's a major problem. So what we are going to do today is to see how we can get you versed with that thing which is like a myth, the accounting. Who is ready for that? Put your hand up. If you're ready, you clap your hands. What are the goals of this session today? Somebody should read. First one. We want to understand the key concepts of our accounting. The second.
Learn to track financial transactions.
And the last.
Exploit tools for financial management.
Just reading at those 3 things, which one do you think you want to know more? Okay, exploit tools for financial management. That's what you think. Why do you want that?
So I want the tools because I don't understand the kind of tools I'm supposed to use to manage my finances. So I need to know the tools and how to explore them and able to manage my finances.
Okay, who else so has something else?
Understanding the key accounting concepts.
Why? Why do you want that more?
I want it more because you cannot learn how to track the financial transactions if you don't really understand some key accounting concepts and you need to explore the financial management tools. You need to know about the concepts first.
Good. Who has something to say with the third? Yes, Cecilia.
Donc, si moi je dois choisir, je vais choisir le numéro 3. Parce qu'on a dit Explore Course of Financial Management. Parce que quand on est dans l'entrepreneuriat, et selon ce que j'utilise, j'ai besoin particulièrement de trucs de finance.
Okay. Thank you. What are the objectives?
Understanding the concept, learn to track financial transactions, explore tools for financial management.
All right. Now that is the objectives of what we want. Okay. By the end of the class, you should be able to do what? Understand the concepts. The next point, you should be able to do what? Learn to track financial transactions, and then you should be able to do what? So by the end of this class, we should come back to see if we have an idea, right, to do those. Those are objectives. Now, for us to get to that, this is a structure. We first of all have to define what accounting is. Alright? We define accounting, we understand the key components of a financial statement. We need to understand the key components. Then in there, these three, income statement, cash flow statement, and balance sheet, are the things we are going to talk about because those are the components of the income statement. But we will lay emphasis today on the income statement. Because after understanding the income statement, it's going to give you enough knowledge about this. We can use that and understand this tree. So that's why I choose to lay emphasis on the income statement. I'm going to go step by step so that you get to understand me. It's a very delicate topic. It might look as if it's difficult, but it's not difficult. By the time we're going to dive into it, you're going to see how easy it is. Why is it important for SMEs in particular? What are SMEs first? What do you understand by SMEs? Small and medium-sized enterprises. In Cameroon, about 98% of all the companies in this country they fall under the SME sector. So very few companies are large enterprises. Okay, so why is it important? First of all, it helps to track financial health. The health of your finances. Is it in good state or is it in bad state? You can think that you're selling, but you're not making profit, right? But without accounting, proper accounting, you will not know if your company is actually in a good health or not. So you will see why it's important to understand the accounting. Secondly, it aids in decision making and growth. You should be able to know that as of now, I want to invest. I want to take out profit and go and use dividends. You cannot make those decisions if you don't have a proper accounting system. I want to recruit one more person in my company. How do you make that decision? Are you able to pay one more person salary? Right? You can only know those decisions if you have a good accounting. So those are the importance. That's how important for you to be able to manage your accounts properly. Okay? To ensure compliance and tax readiness. Because the tax people people in accounting always come to you and they can tell you that you need to declare like this, you need to do this. If you don't have a proper accounting, they can fool you. If you don't even understand your accounting, they can say, no, I think it's bad, just give me 500,000, let me close it for you. Meanwhile, if you have to do your accounting, you could declare that type of 50,000. So it is also important if you are a business executive to understand your accounting so that you don't get into all these little nitty-gritties. Are we together? John, read me that word in italics.
Accounting is the language of business. Understanding it empowers success.
What does it say? Let's go again. Let's get it loud. It says, accounting is the language of business. Understanding it empowers. It means, what is the language we are using now? English. Simple. What is the language we are using now? What is the language we are using now? English. Okay, it's the language. So I use English for you to understand me, right? Business use accounting as its language. If you don't understand it, you are so weak. You are not up to succeeding. You get it?
Yeah.
You get it?
Yes.
I did not write anything in my book. I started writing, you change the page, so I'm not taking.
No, you don't have to. You don't have to copy what is on the screen. You have to write down what you understand. Okay? This is how better it is. If you want, at the end of this class, I will give you all this to follow to write it down. But what I expect from you is, while I'm going on, what you're capturing is what you're writing. Do you understand? Okay? Everybody should follow like that. So, but notwithstanding, I can take you back 1 or 2 slides. Like, where are you precisely? Yeah?
So let's go. As we say, I can take it at the end.
Okay. All right. Good. Now, we enter into the core of the thing itself now. We have seen the structure. We have seen the objectives. Okay? We've seen the structure on how we want to go. We will know the importance of it. Why is it important? We have tried to level the importance of it, right? So why is what's important? This is where we are. This is the core of it. Accounting.
Accounting is the process of recording, classifying, summarizing, and interpreting financial transactions and events.
Okay. What did I tell you how you study? I said when you're studying, right? In everything that they say, there is literature in it. There are some keywords. Do you understand? There is a language which is English inside, but there are keywords. Process. Before we start getting this one, of what?
Recording, classifying, summarizing, and interpreting.
Alright? So you have to record, you have to classify, you need to summarize, and then you need to interpret. Somebody came to my shop and bought something, I record it. Alright? I classify it. Do I classify it under the sales of this or that? I've recorded that I've sold 300 grams, right? So I'll classify it under beverages, under whatever.
Today's sales.
The day sales. I classify what I have sold. Let's understand this sentence perfectly. So accounting is a process of record, classify, you summarize, then you interpret. We'll come to see summarizing and interpreting. You'll get it clearly. But first of all, you record and then you classify. I have sold this amount. For example, I've sold in the bar. I must have sold at the end of the day. I sold 50,000. Now I go to my book. 30 for export. This for top. I classify it. So you see the difference between recording and classifying. So I don't want us just to be taking down definitions and struggle to cram them. Okay? In this, you don't cram, because when you start cramming, you will lose everything. Understand them. You record your process of recording financial transactions. A transaction is what? Money leave from here to here or that. Okay? So you record those transactions. You classify them. Right? And then you summarize them and interpret them. Those two, while in the middle of the class, people understand the summarizing and classifying. Because if I start getting there, they will get you a little confused. Now, the next read. No, some other person. Some other person read.
Its purpose is to provide useful financial information to stakeholders, such as business owners, investors, and regulators, to help them make informed decisions about an organization's financial health.
This sentence is straightforward, right? Claudette, are you with me? I want you to be with me, okay? Now, we have seen the part of the definition. It comes and tells us the reason. Financial information to stakeholders. We talked about stakeholders here before. Right?
Yes, sir.
So we are providing stakeholders, and every name the business owners. Business owners need to know, right? What is the financial health of the company? How much money is entering? How much money is leaving? Which is the business owner? You sell flour, right? You sell fufu, okay? When you put that, you to make decisions, which one should I increase? Because you see that this is the one that is selling more. So you need this information on when every sales is coming. You need to get that information to be able to make decisions. So the business owner needs information to be able to make decisions. And this information is on the transactions that happen, the financial transactions. When the transactions go on, then the business owner can make a decision because he sees the transaction. Read number 3.
It typically involves things like tracking, tasks like tracking income and expenses, preparing financial statements, and ensuring compliance with financial regulations.
This big word, financial regulation, is not just about things like taxes. Okay, so don't get yourself confused. Okay? Now, in business, look at me. There is income. There is expense. Income. Right? Everything that comes in is what? Do you understand? Income is what comes in. Hein? J'ai fabriqué des choses. C'est cela. Quand je sors, je fais. Si je dois aller faire marketing, c'est expense. Parce que je dois payer pour qu'on me fasse ça. Je paye pour qu'on me donne des t-shirts. Je fais ça, c'est expense. Mais quand je finis, on commence à acheter. Quand l'argent, quand tu encaisses, everything that comes in is what you call income. So when you see, when you are classifying, you record everything that comes in. This one came in. This one came in. So you put in every income. And then you go on another sheet. Right? Everything that goes out. These are all the expenses. You see how you're classifying it. You need to know every income and every expense. Right? The tracking income and expenses, then you prepare the financial statement. You can only prepare the financial statement when you can track your income and your expense. Steve, ça va? Is it entry? Good. Key components. We are seeing our objectives now, right? I will ask you people these questions at the certain point of the class. We'll come back. We were talking about key components of accounting. In the beginning, you remember? This is us now in the body of our lecture. We're seeing the key components. But we are going to center on the financial statement. In our structure, we talked about it, right? The key component is bookkeeping, financial statement, and budgeting. What is bookkeeping? Daily transaction records. In every small cafeteria, small shop, small boutique, the basic thing that everybody does accounting is what? Bookkeeping. You have a book where you write in. J'ai vendu tel. Tout ce que tu vends par journée, par quotidien, tu écris là-bas. C'est ce qu'on appelle bookkeeping. Keeping the records. N'est-ce pas? Il est entré, il a acheté pour 10 000. J'ai payé le taxi de 500. Alors que tu écris tout ce qui entre et tout ce qui sort. That's you keeping all financial daily transactions. Get the records of daily transactions. Per day, you get the records. I write this down. Now, in the financial statement, you get those three: income statement, cash flow statement, and the balance sheet. This is where it's a little complicated. That's why I'm taking my class here. Because this one is bookkeeping, it's just writing now. Right? This one is when if I start asking questions on this, we start getting a little, what is that? That's accounting now. Who can agree with me? Alright? This is where we should get knowledge. If you are business executives, you should at least understand this. You must not be certified accountant. We are not training you here to be accountants, okay? But you must have an idea, know how it works. This is a business language. What we say accounting is the language that is being spoken in. It's a business language. So you cannot be called the business executive when you cannot speak the language of business. Okay? So basically this is what we said that. Then the budget in here is income and expense planning. For you to plan all what is coming in and how it's going out, doing the planning. But after understanding this far in the middle, that's where you can budget. Basic understanding or basic accounting is not going to be something which you will be seeing every day. Right? If you are an executive, the accountant of the company is going to be doing more of the balance sheet. Right? But just to have here, don't over-focus your understanding on it. What I say will center on the income statement. What the balance sheet shows highlights the financial stability. If you own more than what you own, what happens? You are not stable, right? So that's why the balance sheet has to show that you own more than what you owe. There's assets, there's another word there, equity. Equity is still on the plus side. I want to start a business. I bring in 500,000 pounds. That's the equity. We understand what balance sheet is, but we'll talk about the income statement. Alright? We are not all at the same level, so that's why I'm talking some things. I don't want people to get confused. Previously, we looked here we looked at what profit is all about. That's us trying to see the structure of the income statement, right? And in the structure, the first definition is profit is income minus expense. This is what you should put in your head, because before we start going down, if you don't understand that this is equals to this, then we cannot continue. The rest, Saba, income minus expense for us to get what?
Profit.
Now, in the structure of the income statement, there are different profits. Before you finally get a profit, which you say this is my money, there are different kinds of profits. So we are going to look at those different kinds of profit before we are going to see the full structure of how an income statement is supposed to be presented. Okay? So let's jump to that. There are 4 kinds of profit in an income statement. 4. To get an income statement finalized, you must have 4 different kinds of profits. So the first profit is what they call the gross profit. The gross profit. The gross profit here, if you look well, the total sales minus direct cost of production. What they say profit is what? Income minus expense or cost. So where is the income here? In this sentence, what is the income? Total sales. That's the income. The sales minus what?
Direct cost production.
So that's what you have your gross profit. So there must be income minus an expense. Cost of production. How much did I spend to produce this directly? I bought the bottle, I bought the cup, I did the plastifying, right? Okay, I spent in drilling the water or something in here. The direct cost for this to happen. Do you get it? Direct cost is cost of raw materials. Every cost directly related to this being produced. Do you understand what direct cost is? Okay? So I sell it, I spent 50 to produce it, then I sell it for 150. So my gross profit is how much? I spent 50 francs to produce it. I sell it for 150 francs. What is my gross profit? 100 francs. Yes. So we see that's the gross profit first. But is that my profit yet? Not yet. Okay? So gross profit is first of all you minus just the direct cost of you producing that thing. From how much you sell it. Gross profit. Sales minus direct costs. Is everybody with me? If you are not with me, blink. Cut me eye. What we call operating profit. What is it? Profit from business operations. That is what they call indirect costs. What are business operations? Now, let's go back here. My direct cost is I bought the bottle, I bought the cup, I bought the labeling, drill the water or something, right? I put it inside. The direct cost is that. Okay? Indirect cost. For this to happen, I pay salaries. There are costs that I incur for the business operation. For the business to operate, I pay lights, I pay water bills, I pay telephone bills, I pay transport bills for the workers. All those different costs is what you call the indirect cost, which is costs generated from business operation. So I have one. Your operating profit now will be your gross profit minus your business operation. Come again. I have sold. Right? In our example, we said we have a gross profit of what? 100 francs. That's the example we made. Our direct cost was 50. We sold for 150. Come to me. Follow me. I come here. The sales. How much did I sell? We said we sold for 155. We sold for 150. Right? The cost, direct cost. These are statements. Now, the gross profit. Gross profit is what? You get it. From the first, we understand, right? Gross profit is sales minus direct cost, which is sales minus direct cost, which is 100 francs. Up to here. Everybody's getting it, right? Okay? Now, the next thing we want to look at is the operating profit. But before we get there, right, we'll have what we call operating expense. How much do we spend? Right? The transport, generally. Because if we produce 10,000 pieces of that thing, would have sold much, right? So in every one piece, how much we spend locally for our operating expense? Let's say we spend about 30 francs, right? If we divide with all the salaries, people get it. If I sold 1,000 bottles, it's going to be what? 150,000. Right? If I sold one, the sales is 150 because it's just one. But if I sold 1,000 bottles, it means I have sold 150,000. Right? So if the salary of, the operating expense in that 1,000 sales is 50,000, for example. Okay? So if I want to get the sales, the operating expense for one bottle, I'll divide it, that can give me about 30 francs, for example. Each bottle, I must have cost my operating expenses 30 francs in each bottle. Do you understand where I'm coming from now? Yeah? So we come here. Our operating expense, we put in 30 francs. Yes. This is all of this is per bottle. Right? So now our operating profits is what? Just keep minusing. Gross profit minus operating expense. So our operating profit is what? 70 francs. This is income statement we're already building. Operating profit is 70 francs. We'll see, don't worry. Up to what we said, operating profit, we've gotten it, right? Now, EBIT, as they call it in accounting, what you see they say EBIT, earning before income tax, is what they call EBIT. Most of the time, your operating profit and your EBIT is the same, because there are two things that are inside the income statement, in between them. Follow this here, step 1, 2, 3, 4, 5. Number 6 step is the way to put what they call non-operating expense, which is most of the time you know. What is non-operating expense? Before I started my business, for example, I took a loan, right? I took the loan, and the bank asked me to be paying back 10 francs. In this one, they have 50,000. Or ask me to be paying back 10 francs every month. That is money that goes out from my account every month, which is not directly involved in my operation. It's not my salary, it's not. So that's what we call non-operating expense. Expense that the money you spend, which is not directly linked to your operations. So sometimes people prepare the monthly income statement, right? So they will put, if they have non-operating expense, if you have it, you're going to put it there, which is maybe paying back of loans and all of that, which comes after the operating profit in the income statement. You get it? Then there's also operating income. Also income that the company generates, which is not from sales. A gift to the company. Money can come to the company like a gift, no, that's income. I'm not talking about expense. All what gets into the company. Expense, salary expense is under operating expense.
I mean, you're a salary earner and you're a business owner and...
No, we're talking about a business, right? Income that comes, this is the income statement of the company, it's not of a private person. Right? So how much money gets into the company and how much money goes out of the company? Right? You get what I'm saying? The company decides to go and do in their extracurricular activities, they decide to go and play a tournament. And then they win a trophy and it's being compensated by money. There's a company that sells water. That income entered the company. It's not directly linked to their operations. So there are some months where you can have a non-operating income which goes into your income statement. Now the EBIT that we just talked about, earning before income tax, will be what? Operating profit plus and minus. You plus the income minus the expense. Wait a minute. This is my operating profit. Is what at 70 francs, right? Right? If I had a backloader and paying back 20 francs, I will minus it from, because that's an expense, right? I will minus it from the 70. Yeah? If somebody dash me another 25 francs, I will plus it to the 70, right? Before I get my earnings before income tax. That is, I will plus all the income that I had, which is not operating. I will minus all the expenses that I have. That's the plus and minus. You plus the income, you minus the expense. And remember, I told you that most of the time your EBIT is the same like your operating profit, because this non-operating, most months you don't have them, it's zero. You get it, right?
Yes, sir.
Most of the months there is no non-operating expense and there's no non-operating income. So on your income statement, those things are zero most of the time. But there are some times that they might not be zero. So you have to reflect on your income statement. So let's take our own year to be 00. Is everybody with me?
Yes, sir.
Figure, what is our earning before income tax?
It's still 70.
Why do you say it's 30?
30.
It's still 70. Right? So in this case, the EBIT is still 70. It could change if we had the figures from the non-operating or the operating. You get it? So here our EBIT is 70 francs still. That's the income statement. Then they are going to come, they put here, next is income tax. They will calculate the percentage of your EBIT. If the same income tax is, for example, 5.5%, they will calculate 5.5% of 70 francs. Then the minus it to have your net profit. Calculate 5.5% of 70 is what? Well, let's assume that's 5.5. 5.5 of 70 is what? 5.5 divided by 100 times 70 off each times 3.85. The income tax is what? 3.85. 3.85 francs here. So now our next profit. The EBIT minus. People have seen that income statement is easy to produce, right? You just keep minusing as you are going down. Which is how many?
66.15.
How much? How much?
66.15.
Now this is your money. We have made a strategy here that permits us to maximize profit. Now, assuming that here was 80, which means that we had high salaries, we had high electricity bills, high water bills, the operating expense will increase, right? So you see that it's minus 50,000 here, we would have been making what? 16 francs as profit. So when you are doing your management, you want to maximize profit, you can see it from your income statement. We had our operating here is 30. Because our operating is 30, our profit from sales of 150 will make a profit of 66 francs. And next profit. Business executives. Are you with me? Numbers. Number way. Numbers. 1, 2, 1, 2, 1, 2, 1. 1, 2, 1. So it is 1. Okay? Once have a group, let's shuffle ourselves. The ones go on one side, the two go on another table. Today is we have two companies, and in the two companies, you guys are going to give me the name of your company, and then you are going to give me what you sell, and give me a monthly income statement, right, of what you have sold. Let me see the income statement. Remember in our last class, we talked about midterm financial plan. True or true? We talk about global strategy and midterm financial plan, right? This midterm financial plan starts by you giving me the income statement of the year. It can be the month and then the year. And projects me an income statement for a month. Do you understand that? Is that doable? Our sales will be like that. I want to see at the end, I want to know that that business is profitable, right? I can only see that it's profitable if you speak the language of business. That's what we said, right? Accounting is the language of business. So tell me whatever you're saying, put down the small marketing strategy, and then give me the income statement. Let me see if that business is profitable. Make it monthly sales. For example, don't put me sales of 150 francs. If you tell me that you're going to sell 10,000 packets per month, right? It means you've sold 10,000, it means you're having 1.5 million sales. In that 1.5 million, how much was your direct cost? In that 1.5 million, how much did you spend as salaries and everything, operating expenses? You get it? Consider taxes to be 5.5%. Let's consider the tax to be 5.5%, and then you guys should do me an income statement. We have 25 minutes for that exercise. Think very well, and then you start working. Over to you. So by the time we stop the 3 minutes are over, 2 people will go on the board directly and start writing down.
What was the gospel? What was the gospel fee there? What was the gospel fee?
Gospel fee is
1.9.
and operating profit minus it.
Net profit 4.775 minus 2,266.
Who is the leader? And this is who is writing. Who is the leader? Clovert is the leader. Group 2, who is the leader? Benas is the leader of Group 2.
Yes, sir.
Benas, come outside. Clovert, come outside. That's all I want from you as a leader, right? Generally, how did it go in your group? How did the other teams participate? The other members in your group? How was it? What was the atmosphere during your working session?
All right.
Alright, for a start, things were not so easy from doing all of the activities. We had to understand the activities, and it was quite a challenge to all get our heads together. And even when we started, some of the members were not in line, some were lost. So regarding all of that, we had to make sure that everyone was on the same page before even commencing the activity we were given. And when we were on the same page, even though we had a little bit of disagreement, because we all have to work as a group, everybody has to be in line. Even though we had some little bit of disagreement, but at the end we came together, choose a business, choose a plan, choose a strategy, and we got through everything perfectly.
All right, thank you. Let's give them a hand. At least what they did is they succeeded to put themselves together, and they promised that they have something which is good for us. Let's clap for Kupwa again. All right, Group 2, tell me, how did your group of finance? How did you go about it? Generally, how was the working environment? That's all you need to tell me.
Moi, c'est Vénance. Nous avons très bien travaillé. Malgré les petites difficultés, il fallait une compréhension du texte et nous expliquer. Et nous nous sommes bien en sortis. Nous avons très bien compris le texte à la fin et nous allons vous présenter un bon travail.
All right, Kupwa, can you make some noise for your group? What have you heard so far?
Ce que j'ai compris là maintenant, c'est que tout ce qui entre dans mon business, c'est le income. Tout ce qui sort, c'est le expense. Tout ce que je dois à quelqu'un, c'est le liability. Liability. Et ce que j'ai, c'est le asset. Ce que j'ai dans mon business.
Abakamoha, anybody tell me what you have gotten so far from the beginning of the class till now, not only this one, so that we get to know that we are progressing. Yes, Steve.
Okay, I've heard about the income statement, which is the profit and loss statement. The balance sheet, which shows the company's financial position at a particular period of time.
Good.
And the cash flow statement, which shows how money enters and leaves the company.
Perfect. Now back up for him. Good. That's a good summary. Who else? What have you gotten so far?
I'm called Skylar. I've learned especially the definition of accounts, which is the process of recording, classifying, summarizing, and interpreting financial transactions. because at first we don't usually do a statement and we usually mix it. So we want your setup understand a brief on how we can do it accordingly, not to endeavor some kind of losses. Thank you.
Thank you very much. Very well said. He has actually gone back to define what accounting is, and then she takes out what she picks from it.
Summarily, talking about accounting fundamentals, I understood that as a business person, you have to know that accounting is very important for the business. You have to be able to keep records, keep tracks of what comes in and what goes out in order to manage your profits. And if your expenses are more than your income, then your business is bound to crash. And in order to avoid the business to crash, you have to keep a good record, have an account statement. When you record whatever comes in on your cash flow, you're going to know the exact amount that you have in your business. Because when you are making sales, things are going out of your shop, you may think that you're making profits, especially in the sense where people take a lot of credit. They borrow a lot and then you're happy that things are going, the money is not coming in. But with your cash flow, you're going to be able to keep record of that, and then you're going to know how to manage your business.
This is perfect. We were looking at the financial statement as the key, right? There's bookkeeping, there's the financial statement, and then there's budgeting, right? And in the financial statement, there's the income, there is what? The cash flow, and there's the balance sheet, right? Now, I'm pleased with what Joe just said, because in all of this, the emphasis that I have laid here is for you to really understand the differences between the income statement and the cash flow statement. Okay? That explanation that she gave is very perfect, because inside, you not understanding what the income statement is and what the cash flow statement is can actually make you think at a particular point in time that you are flourishing in your business. Meanwhile, you are not. Do you understand it? So when you are clearly putting down your income statement, always go back to look at the cash which is in hand. Actually, this is what it shows. I have sold like this, but what is in hand? Okay? I want one feedback and one question for me concerning this class.
Greetings everyone, I'm called Skylar Tempe. I really, based on the objective of what we studied on accounting, I really grabbed, learn to track financial transaction. Actually, this one really touched me because I noticed that in many businessmen, they always have entanglement in tracking their financial problem, which will lead them to a greater loss. Because if you cannot actually put your resources together, actually you will face a lot of difficulties based on this tracking of financial transaction, because we're not able to calculate all the other terms and direct costs. So this part really touched me, because according to me, if you cannot track your resources very well, it will be difficult for you to get your profit at the end. So
thank you very much, Skylar. She has, in all the three concepts that we got, she underlined the tracking, right? How you can track your financial transactions. And also it helps to be able to manage your finances. When you track them, right, you can properly do your management. Okay? So we have seen the importance of this, understanding this class. We have learned a lot about designing a model. Okay? We have learned a lot about building strategies. We have learned about marketing strategies. The marketing strategies help us to increase our sales. Okay? But when the sales come, how do we manage it? Because the sales can come. And remember, we didn't just talk about income statement. We elaborated a little bit about cash flow statement. When the sales come, now you must understand, you must have understood also that you can have this figure here, net profit at 126 million, but the money is not in your account. Okay, so in your cash flow statement, which is just cash in and cash out, cash inflow and cash outflow. So if every cash inflow is not the same as sales, there's a difference between the cash inflow and your sales. The sales here is the sales you have shown on your income statement. I sold 1,200 kilograms, right? That's the sale. But what is a cash inflow? Is a cash that actually enters. So you see your cash inflow statement and the cash outflow might not be the same as the money you see in your bank. Because by the time you are paying all your taxes, you are paying all your salaries, you'll be expecting to see 1 million something in your bank. But the cash inflow is not that, because there are still some debts outside. So that's you now managing your finances perfectly by understanding this concept. Okay? So, as we said, the next class, we are going to go further into still in finance. I will touch finance another. Now will be financial analysis. Okay? Now we have the tools. How can we properly analyze the finances to see if our company is stable? See if our company is the profitability ratio, the stability ratio, all of those things. How stable is the company? How profitable is the business? You were just showing me this. But if you want to build a full project, you want to design a plan, we talked about business plan last time. You want to do a business plan and you want to show how profitable that business is. The investor wants to see if it's a profitable business. The investor wants to see if it's a stable business, right? So we are going to use still these finances to do our stability, our profitability. Okay? That's financial analysis. So we leave from concepts and fundamentals of accounting to financial analysis. So you take back this structure of the income statement basically and go ahead, read through it again, understand it better for us to have proper understanding in our next class. Sur ce, je vous dis au revoir. Je veux vous donner ça, pas seulement pour vous.
One.